Breaking news coming in, and this is again a cause for very, very grave concern. There is a bloodbath on the Dalal Street. That was the big apprehension. So pre-trading, Nifty is down 900 points. Pre-trading, Sensex is down 2,800 points. The Sensex had fallen 7,000 points in pre-open trade. The rupee falls 50 paisa in opening trade because remember, markets want stability. Markets desire peace. But an oasis of peace and stability in the region has been targeted. The UAE has been targeted. But the bigger concern for Asian markets, and this is not just India, you'll see alarm in Japan, you'll see alarm in Singapore, you'll see alarm in South Korea, you'll also see alarm in China because it's that very crucial Strait of Hormuz. The Strait of Hormuz, Iran hasn't officially blockaded it entirely, but it's called a smart blockade. Iran is ensuring only select ships can pass through, and this means insurance costs will go through the roof. The moment shipping costs go through the roof, oil tankers, they either drop anchor or they don't even go in that area. And that is why oil prices shoot up. And the apprehension is, God forbid, if oil prices as of now from 60 to 80, should they cross 100 and go higher, then the markets will be in tailspin. I quickly want to cut across and bring in my colleague Abha Bakaya for more on the story. Abha, this bloodbath on the Dalal Street, we feared it, but it's happening, and there could be worse in store, Abha.
There could be, Gaurav. Good morning. Yes, markets have been on tenterhooks since late on Saturday when we, of course, were tracking the bombs and the missiles that were taken off and targeting the entire region. Things have, of course, escalated. We've been tracking that live and constantly here on the channel. Markets just about to open in a few moments now. And in the pre-open already, as you mentioned, Nifty is down about 900 points right now. Sensex down 2,800 points. In fact, 7,000 points in pre-open, recovering slightly. Rupee is also down about 50 paisa in opening trade. And we'll see further pressure on the back of what is likely to happen to oil. As Gaurav mentioned, oil is really what this is all about, with the Hormuz Strait having been closed, and that actually sees about a fifth of the world's oil traffic coming through it, and largely, of course, also towards India. That means oil prices could go from $65 a barrel to close to $80 a barrel, putting immense pressure on the rupee as well. So this is really the cause for concern right now. Can the RBI intervene at this stage? They do have comfortable headroom to do so. So that's actually some silver lining. But first, the markets are going to be tracking the more immediate reactions to the ongoing tensions in the Middle East and in that entire West Asia Gulf region. Gaurav.
So right now, usually there is a buffer. Government sources were telling India today that we have oil reserves for about 74 days, and we also get our oil from 40 plus countries. But this is the most convenient, and it's not just oil, it's also LNG that we get from the region. So it's not in just India, Abha. India is concerned, but Japan, Singapore, South Korea, China, markets there would be very alarmed.
Yes, we are. We have seen these 3-4 countries having been identified as having the maximum exposure, yes. However, Gaurav, for India, it's particularly critical because we all know that a spike in oil prices completely imbalances our fiscal deficit. And that's why it's always a big red warning sign if we start to see those oil prices escalating. Yes, we have widened our sources. We all know of the ongoing battle between, or the pressure from the US and diverting from Russian oil. Venezuelan oil will, of course, kick off starting in April. But Saudi Arabia also is a huge source, and the Hormuz Strait continues to be the largest source. So even if there are other sources that we're tapping into, some of those things take time to play out. As you mentioned, we have about 70 odd days worth of reserves, and finding new sources and ensuring delivery on time is all a sort of long, arduous process. The OPEC, however, has in the meanwhile said that they will raise output. So they are looking at boosting output comfortably, and that should, of course, help the prices to remain in check to a certain amount. But India's exposure on this front and also exposure on the currency, both pockets there are worrying.
It indeed is, Abha, but does India also have a backup that should this escalate, we then increase oil imports from Russia. We've done that through the Russia-Ukraine war, and clearly those sanctions cannot be imposed on us once again, because India will say, look, this is not our war, this is America's war on Iran or Israel's war on Iran. At that time, we need to ensure that our markets remain safe. Abba, is there an option for us?
You know, Gaurav, it's such a tricky geopolitical situation currently. The US has put so much pressure on India to move away from Russian oil. However, we may be left with no choice at this point of time. I'm not sure that currently Venezuelan oil is going to suffice because, geographically, and in order to, of course, get enough quantum of oil to Indian shores, it continues to be a bit of a challenge on that front. So this is still going to play out. But in the interim, of course, OPEC has already announced a boost in output at this point of time. However, traders are fearing that prices could go as much as $100 a barrel. Right now, we're at 65, anticipating 80. They're looking at possibly even 100. And that's the kind of, anxiety around those oil prices that's currently building up as well.